This is Bill Beaudry, and let me show you this free seasonal software that I'm giving you. All you have to do is just put in your address so I can send you a postcard one day inviting you to a bigger seminar, because I know you're going to be a raving fan once you start using this. There's nothing to buy, and let me show you how you can use this. There's several different ways you can trade with this. Actually, there's several dozen different ways, and you're going to see how valuable this is in just a moment. I'll quickly show you a couple ways you can make money right away with this. But caveat emptor, there's no guarantee that this or any other method in the market will make you money, and of course you're responsible for your own profits and losses. So this program will create seasonal charts of any stock that's in the Yahoo database, so you never have to buy data. And all you have to do is press this button, Get Data, type in the Yahoo symbol like IBM, press Get Data, and voila. The yellow line is the price of IBM as it's been trading this year. This green line is a seasonal of the average annual trading pattern of IBM for all the data that's been downloaded. And in this case, you look up in the right hand corner, it says since 1963. So the full year 1963 all the way till 2011 have been used to create the seasonal, and that's what this green line is. If you want to change the number of years that creates the seasonal, you just have a drop down menu. Now you have the last 10 years to create the seasonal. Now you have 20 years to create the seasonal. It's wonderful. Now here's where this thing is really useful. Let's go all the way back to all data. And what I have programmed in this program are called factor seasonals. And what that is what is the trading pattern of IBM under different market environments? How does that stock price trade when it's affected by different factors? So let's take a look at how IBM trades during a business expansion phase of the business cycle or a recession. This, the red line is a recession. You can see it usually goes down, and this is this typical trading pattern during the boom part of the business cycle. Now take a look at this. This is really cool. Even during a recession, which is this red line, IBM tends to start going up in November, and that's where we had the low. It starts to go up, and your recession factor seasonal as well as your boom time factor seasonal both go up, and then you go back here all the way till January, February. They both tend to go up. This is a great time period to trade, and then you would be very careful about getting out of the market, possibly right here or right here. You have to check. At that point in time, you'd be evaluating things quite carefully. But the factor seasonals tell you, uh-oh, be careful. This is information you can't get anywhere else. It's secret unless you have information like this type of program. So it's like an X-ray machine that can take apart the market and show you where the bullish and bearish tendencies usually come in. We could also take a look at a bull-bear market seasonal. You can see the same pattern. This is a bear market, there's a bull market. Once again, this is where the market usually makes a low. And the market did make a low right in this period. And one of the ways I use this to trade is I come up with periods like this that can be a low, this period or this period. I look a little bit to the left and a little bit to the right for an entry point. When a MACD does a crossover, or let's say I draw a trend line on the price and it would break right here, or the MACD has a crossover, that would be my entry point, and you know that would have been this point right here on IBM. All right, so this is the way, one of the ways that you could use this to trade. There's another factor seasonal, which is the inflation rate factor seasonal. This shows how IBM trades in increasing periods of inflation and in decreasing periods where the inflation rate is decreasing. And you know, if we have more inflation coming, because we're fighting deflation right now, but if we have inflation coming because of the money printing that's going all over the world and with the Fed, this factor seasonal is going to be very useful, especially when you're evaluating resource stocks. Now, there are many ways to use this. Like I said, what I usually do is I use what are called the adaptive seasonals. There's what's called a 2-month, a 3-month, and a 4-month adaptive seasonal. I usually, for steady state, use the 3-month adaptive seasonal. Most all my trading and investment decisions are made on the 3-month adaptive seasonal. If I want something that's a little bit more sensitive to the market, I use what's called the 2-month adaptive seasonal. And that's this orange projection line here. What is it? Well, you can see if you're using regular seasonals, which is the green line, to trade IBM, they did a lousy job in predicting this drop-off right here. But what if you were to take all these years that you used, these 55 years of data, and only took to create your seasonal, half of those years, the half that most look like the way IBM has recently been trading over the last 3 months, or over the last 2 months, if we're using the 2-month adaptive seasonal, or over the last 4 months. What if we pick, let's use the 3 months, those years, half of them, to pick and to create a subset of years and then create the seasonal from that? Well, that's what this orange projection line is. So let me make it more clear. If I use the last 20 years of data for IBM starting in 1992, and I pick 10 years out of that to create this orange projection line, which 10 years? You can see it's really predicted the market pretty well. If I pick the years that look the most like the way it's recently been trading, that's going to give me a pretty good projection line, okay? Pretty good. And that's what the adaptive seasonals are, okay? And there's a skill in picking the right number of years to use, but if you're just doing some quick analysis, I use all as default, but I'll teach you in the various videos how you can pick, more accurately the right number of years to use. And you can see that regularly you might expect the market to be going up right now, okay, into the new year using this factor seasonal. And if you were expecting a low right around here, okay, what you would do is a little bit to the left, a little bit to the right, you look for a trend change, and sure enough there was a trend change here in the MACD, so that's where you would have been buying. That's how you use this. It's really that simple. So let's give an example with another stock like AT&T. You type in T, the symbol, you get the regular seasonal. Let's then go to the factor seasonal, and the factor seasonal is suggesting that there would be a low right around here, and sure enough, the market crossed, and that's what you would be doing. You'd be using this for trading decisions. Now let's take a look at the bull and bear market calendar, and you can see even with AT&T it's the same thing, where right around right now the market, even during recessions, tends to go up a little bit, then it starts falling at the beginning of next year no matter what. So you can see the stock is sort of losing all its umph, so I'm not too interested personally in trading AT&T right now, at least buying it. But this is how you use this information. You come up with your best adaptive seasonal, and you see even the adaptive seasonal says the market will be going down. Now take a look at this, okay? Is there some way it would have called this steep drop off here? Well, this is around October the 1st, so let's go back to the data and compute the seasonal for October the 1st. October 01, get the data. So the data ends right there. 3-month adaptive seasonal. When both of these seasonals are in the same direction, that means yes, there's probably a good prediction. You can see that the market is following the seasonal with a very high correlation. Correlation is very high, about 90%. And you can see they're both predicting this fall off. So someone who's trading with trend lines might put a trend line here, and if it broke that trend line, they might buy puts right here, or they might sell calls that have 1 month to expire and then collect the premium. That's another way you can do it. You could have done that here, or any place that it's reasonable to do that. There's a number of factors you look at. That's one way of trading for people who would like to collect premium. And here's the MACD. It makes a signal here. So right here, this is suggesting down. If it breaks the trend line, it's suggesting down. The MACD has already said it's going to go down. And once again, if we get the data, let's see what happens. Bingo. This thing just fell out of bed. And that's how you use this. It's just one of the ways you use this for trading. It's 100% free to you. All I ask is you give me your address so I can send you a postcard, because I know you're going to become a raving fan once you start playing with this and see all the different ways you can use this. When you read about a stock in the news or you see something on TV, right away before you invest, type it into the seasonal program, see what the influences normally are, and you can see if they're trying to really basically pump and dump a stock on you. And this is going to revolutionize your trading. So just put in your information, your address, and you'll download it in 1 minute and have it up and running immediately. And remember, as a condition of use, you understand it's not guaranteed to produce winners, to make you money in any way. You're totally responsible for whatever you do with the market, profits and losses, but you'll find that this thing will absolutely help you just revolutionize your trading. And I'm giving it to you because I was so frustrated over the years trying to come up with some method that would help people make better stock decisions and help them create a legacy IRA where they make so much money through investments that's better than just buy and hold, that they can create or amass enough generational wealth that they can pass it on to their kids, and there's enough money to do great things in the world. And that's why I built this, because if you just listen to Wall Street, all they care about, these large investment banks, is just basically sucking money from people. And this will help you take investing and trading in your own hands, and that's why I built it. It's yours. It's entirely free. I mentioned it in my books. If you want to read my books, you can go get them on Amazon.com, but even there, I don't care. There's no obligation for this. It's totally free. Once you learn how to use this, you will be doing, every stock you'll be running past this, and you will be finding so many different ways of using it. It's just going to revolutionize your trading, and you're going to realize that many hedge funds are privy to information like this, and this is when they pump and dump stocks, and so you can ride those trends if you know what to look for. But once again, you got to be careful with investing, because there's no such thing as any guarantee for success in the investment field, but this will help give you an unfair advantage. It will help give you an edge. It'll help put the odds in your favor so that you can really finally start winning in investing, stop losing because you get in a trade at the wrong period of time. And the way I use it, it's really simple. I screen for undervalued stocks. I have a number of criteria, and then I run them each one by one past their seasonals, because I don't want to be holding a stock that does nothing forever, and I wait until buying until they're basically at a seasonal low or they're right ready to go up, and that's how I can cut my holding periods down, and I can eliminate a lot of losers that way and maximize my chances for success. But like I said, there's a couple dozen ways you're going to end up using this program. It's totally up to you. I give it to you with my heart open. Just use it, make money. Good luck on your investing.